Good morning, options traders. Steve Ganz here, and I've been a little bit light in posting here in the past probably 3 weeks or so. A few weeks back, my 86-year-old mother had fallen, hurt herself, and then things continued to go downhill from there. We had to start getting her 24/7 care, family chipping in on that with being there kind of around the clock for quite some time. She did pass early this week. So I have obviously a lot of family things that we'll be addressing in the coming week or so. That's also still going to keep me tied up a little bit. All that said, before I take off here today, I did want to see about getting a trade concept out there. So to get this trade concept, I went in and I looked at flow, and I look at flow summary here, and I kind of see what is bullish in flow, what is bearish in flow. And something stood out to me here. I saw SPX, which of course is the S&P 500 index, $166 million in bearish flow. So I wanted to focus in a little bit on SPX. We can see that it's certainly bearish in nature based on the flow indicator up here. And I can see that a lot of puts are being bought at above the ask. So in other words, people are paying above the going rate for these puts. Now that's also happened a little bit on calls, but overwhelmingly there's a bearish sentiment here given the put buys that are taking place. So, and I should also say that SPX tend to largely be traded by larger money, more sophisticated traders, large institutions, and hedge funds. SPY, the SPX's kind of baby brother, if you will, tends to be a little more traded by the regular retail trader. So SPX carries a little more weight in my mind also for that reason. So if I'm looking at something that I wanted to be a little bit bearish, I would lean toward coming in, and there's a few different things I can look at. I can just buy a long put. I could do a bear call spread where I'm selling a short call spread above the market, or a bear put spread, very similar profiles here. And I'm going to take a look specifically at the bear put spread. So I come in and I take a look at this, and I can obviously, with a tool like Option Strat here, I can select my expiration. And something I want to take a look at here specifically is, you know, how that expiration, how the P&L on that expiration might vary a little bit based on when I do that trade. So here, if I go shorter to October 28th or so, I'm about a 3,000, if you will, reward in that trade, and my max loss is 1,900. So max profit about 3,000. Now, if I come out here to excuse me, say the monthlies, I'm looking at 3,100, 1,800. Now, one of the reasons I'm looking at going out a little further here is, and this is not a political opinion, this is just an opinion of, I think we're going to be in for a little bit of a bumpy ride maybe in the markets as we get into the election, just because I think there might be some turmoil around this election, some disputed claims, etc. I'm not trying to make any political statements here, just an observation that the election is going to be as tight as some people think it might be. There could be lots of claims being made, etc. And we could end up in a situation where the election may in fact not be decided when the votes are counted. So as a result of that, I think volatility might tend to increase in that scenario, and I think the markets might tend to sell off in that scenario. So I'm looking at this particular trade where I'm going to come in and I'm going to buy, I'm going to buy the 57.40, and I'm going to then sell the 56.90, giving me this particular spread here that has a maximum profit of 31.50, maximum loss of 18.60. So now one of the things I am going to do on this, again, I'm going to be tied up in the coming days, so I'm not going to be monitoring this. I'm not going to come out and say, hey, I'm changing it this way, etc., at least this next week. But I do want to take a look at a chart and say, where might I say, I was wrong. And if I come and look at a chart on SPX here, I think my wrong point is going to be if we break to new highs, and I'm just going to call that 5780. So right here at 5780, if we go above that and close above that on any given day, I would say, yeah, okay, we're back in uptrend territory. So that's going to be kind of my stop point, if you will, is going to be right around that 5780. So coming back and looking at that, if the market were to rally up to 5780 right in here, I would be down $500 in this trade, depending on when that happens. Obviously, if that happens later in the trade, that could be a little bit different number here after some theta decay happens. But that will kind of be my line in the sand at this point as to when I might consider pulling the plug. Now, on the flip side, if our market sells back down into here somewhere, comes back down into this 5650, 5600, somewhere down in here, if volatility picks up, I may consider selling a put spread, a narrower put spread that would give me zero risk of loss to the downside, but might be able to juice this trade to bring in a little extra premium, essentially turning this trade into a condor. And for me, that would probably be down here, maybe around this 55.50 range, somewhere in there. Might be where I'd start to look at the market. I'd look at the volatility, see how that's picking up, and see what might happen then if I were to sell a put spread. And if I come back and look at my market here, I would probably consider somewhere right in here, this 5,500, maybe to be a bit of a support area. And so if I were to sell a put spread, I would probably sell something like a 5,500 and then maybe a 5,470 or something relatively close there, so that the backside of this would not go below zero, even if the market tanked at that point. So that's kind of my game plan and my thought on this. So I'm going to go ahead, I'm going to save this trade, and it's a bear put spread, and then I'm going to make a note here, stopping out at 5780 or higher close. And I'm going to save this trade. I will share the link down below so that all of you can open this up and take a look at it as well. So that's going to be it for right now. I do hope to try to get a couple of other things out, maybe over the weekend or possibly next week at some point, but I'm just not sure what the schedule is going to be. So I'll certainly get back in the swing of things a bit more after I return. So that's it for now, everyone. Take care.